and welcome back to Data Driven Finance, brought to you by Yodlee. I'm Mike Stiles, and my guest today is Kat Cloud, Principal Director, Open Banking Compliance at Yodlee. Kat's also a board member at the Financial Data Exchange, and prior to her time at Yodlee was head of UK public policy for Plaid. And we're going to be talking about things to be mindful of where compliance is concerned as we move toward open banking. And that's going to no doubt include some questions on CFPB 1033, that rule. So, Kat, thanks for being with us on the show.
Thanks for having me. Great to be here.
Well, let's find out a little bit about you first. How did your interests or fate or whatever it was pull you into public policy? And then after that, compliance and all things open banking?
So I actually completely fell into policy, compliance, and open banking. So after graduating from university, I was desperately looking for a job, and the first job I actually got offered was to work at the Financial Conduct Authority, which is the UK financial services regulator. I just so happened to pick the policy track. I don't even actually remember picking it, so I completely fell into it, and I just loved it. I actually really enjoyed what I thought was such a simple process of just paying with my card, not even really having to think about it. Was so intricate. It involved so many different elements that you don't actually see as an everyday consumer. And I thought that was incredibly interesting and kind of drove me to learn more, drove me to also better understand open banking. And specifically on open banking, I actually just so happened to be right place, right time. So it was 2016. And at that time in Europe, we were actually getting the revised Payment Services Directive 2, which in everyday language, it was just open banking, but for the UK and EU. So my first day working was all about learning exactly what is this concept of open banking, because we have to implement it as the policy team for the UK financial services regulator. So when I say I fell into it, I really did fall into it. I did not pick and choose this, but I just was lucky enough and happened to absolutely love it. And even today, like as open banking starts to grow into open finance, just more and more things are becoming interesting, and you're learning, how could I get access to different types of data that could actually enable a consumer to make better financial choices.
You're definitely at the front of the wave where all this is happening. And, I love coming at every episode asking my guests to just assume I'm an idiot. And too often that's a really safe assumption to make. So tell me what open banking is. I mean, what is trying to be achieved, and how does that differ from how we think of banking today?
Yeah. So the way I always like to describe it, open banking is not as scary as it sounds. I think the second we talk about opening up anything with banking, people tend to get a little bit nervous. But if you actually boil it down, and the concept of it is just allowing a consumer to enable the sharing of their financial information to another third party in order to actually make it easier for them to better understand exactly what their data is saying to them, help them better manage their finances, and more importantly, help them make better financial decisions. So my favorite example that I really love to use to kind of turn it into a conceptual thing that people understand is it's a budgeting tool. It really enables budgeting. It really puts the consumer back at the heart of their finances so they can, in real-time fashion, move data from their bank account into a more user-friendly product that helps them better understand how much money they spent on coffee or how much money they're spending for their utilities each month. It really is designed to open up data in order to enable a consumer to make better financial choices.
So it's not chaos, anarchy, and the end of the world.
Exactly. Definitely not that.
Well, what has to happen in order to make open banking a reality?
So it's a mix of things. And I think one of the great things that we have with Yodlee is that because we're active across the globe, we actually see open banking happening in a myriad of different ways. So if we look at Australia, we have the consumer data right, which is financial regulation that has enabled banks and kind of made it a requirement of banks to unlock this data to allow third parties like Yodlee to easily access that data. So you kind of have the Australia example, which is where there's regulation that has specifically enforced banks to unlock the data and share it with third parties. You also have the UK and EU example, where, again, similar thing, it's driven by regulation, where banks have been required to unlock and share this data with authorized third parties. And then in the US, up until we actually finally get 1033 and it's fully implemented in a couple of years, it was very much market-led. So it was agreements between companies like Yodlee and a data provider, so a bank, that we would kind of have that bilateral arrangement where they would enable us to access the data. I will say the one thing that underpins all three of those approaches is the use of APIs, so application performing interfaces, because I hate using jargon, but the use of APIs. What those do is they just provide the plumbing behind the scenes that actually enable the movement of the data. So it's, if you think about it in the most simple terms of plumbing, it's literally just one faucet is at the bank, you turn it on, the data then moves to the other faucet that is at Yodlee.
What exactly is that CFPB Section 1033 rule? And you said it hasn't been implemented yet. It's coming in a couple of years?
Yep. So 1033 is a specific section within the broader Dodd-Frank Consumer Protection Act, which we first got in 2010. So it's just a subsection of that wider piece of regulation that is, again, enforcing that a consumer should be back at the heart of their financial services. But what 1033 specifically is doing, it's the open banking regulations for the US. So it's codifying it into law that banks will have to enable the sharing of data to an authorized third party like Yodlee in order for a consumer to obviously get useful products and services. And when I say it hasn't been implemented yet, so what we actually saw was a couple of weeks ago, we got the final rule. In the final rule, it states that the different compliance timelines for the different banks. So if you are one of the biggest banks in the US, you have until April 1st, 2026 to be fully compliant. And by fully compliant, what we mean is that you have the relevant APIs are available, and that's what you are using in order to share data from yourself to an authorized third party. Before that, you can have APIs available, but they don't necessarily have to meet the full requirements of 1033. But from the 1st of April 2026, they will have to meet all of the requirements of 1033.
Well, what kind of data are we talking about? I mean, what data is and is not included under that rule?
So we specifically always kind of try and break it down based on account types. So if you're a data provider, so you're a bank, and you offer a Reg E account or an asset account, so things like your checking account, your savings account, those types of accounts. If you are a Reg Z provider, that means you're offering credit cards, so any credit card accounts that you might have, and then also digital wallet providers. So if you have an e-wallet that you kind of top up with money occasionally, that's also now included. If we then kind of break that down and go to the specific data points that we can expect, it's a number of data points that really help a consumer to understand exactly what that account is providing. Because the whole goal of this is that you're getting as much information as you can, putting it in a more user-readable format. So if I take a checking account, for example, the types of data that Yodlee would be able to pull would be things like your balance. It would be your account number, your IBAN. It would be if you have any outgoing payments. It would be 24 months of historical transactions. It would also be any of your current transactions, things like that. So essentially everything that you are seeing on your phone, on your mobile app, or on your banking app on your phone is what Yodlee is going to be able to pull, as long as it is a specific account that is within the scope of the rule.
Well, with the rule in place, what opportunities does that create that weren't there before? I mean, and I guess that includes opportunities both for the banks and for the consumers.
Definitely. I think there's so many different opportunities that are growing. And if I look at kind of a golden opportunity for the banks, it really is efficiency. The best part of open banking from a bank's perspective is you really need to kind of clean up your data, and you need to make sure that it's all easily accessible, it's all readable. So it's a huge effort for them. They have to put in a lot of time and money to make it work. But once you put in that, you can then actually get a lot of value back from the data that you've had to clean up and you now have to provide, because you can get more analytics off of it. You can better understand exactly how consumers are interacting with their bank account. Like, you can pull more learnings and more modeling from this, so you as a bank actually understand your clients a bit better. From a consumer's perspective, like I've been saying throughout this, the kind of most tangible benefit is that they're able to move their data around to different like fintech apps that they might be using on their phone, so they can make better day-to-day financial decisions. So the idea of saving up for a house, for your first deposit for a home, it may not be as far-fetched as it used to be. It really is kind of focused on breaking down those barriers and allowing, no matter where you are on the financial spectrum, you are able to better understand your data and make better decisions. And then if I just kind of look to like Yodlee, it's obviously going to massively benefit any data aggregators and fintechs as well. And like for us, this is the idea that we've been pushing for 25 years of our history. We've been entirely built on the concept that consumers should be able to safely and securely share their financial data in order to have a more intelligent financial life. So no matter where you kind of sit in this open banking ecosystem, be it a bank, be it a consumer, be it a fintech, this is dramatically going to help you in your business.
25 years. You've been very patient.
We have. I think with any big technological change like this, it does take time. But once it finally all happens, it's worth those 25 years of waiting.
Well, you mentioned the deadlines. What happens if these deadlines aren't met by the banks?
So what we've seen in the past is a lot of times there's communication between the banks and the CFPB, who's in charge of ensuring compliance with these timelines. And I also saw it when I was actually a regulator in the UK. We would have constant discussions with the banks to just understand, okay, how are you meeting the timelines? Do you think you're going to make it in time? If you don't, what are the reasons for the delays? Things like that. So while I can't speak on behalf of the banks and I can't speak on behalf of the CFPB, I think it is safe to assume that there's going to be constant and ongoing discussions between the banks and also the CFPB to just understand what are your timelines, how is this working? But I think the other smart thing that the CFPB did in 1033 is they introduced the requirement of a standard setting organization. The main goal of that is just to ensure that everyone who wants to participate in the open banking ecosystem is using standardized APIs. Again, the goal of that is to speed things up, to ensure and make it as easy as possible for these giant banks to become compliant within the timelines. So we've been working kind of in the background, and you mentioned it in my intro, part of being the financial data exchange. So everyone in Financial Data Exchange has been working for years now about building a standardized API. And the people at the table, it's not just a bunch of fintechs. We have the largest banks at the table. We have the largest fintechs. We have smaller banks. We have smaller fintechs. We have a range of participants in the broader kind of open banking ecosystem sitting around the table, collaborating and building out an API that is solely focused on making sure that these banks can be compliant within the timelines that the CFPB has given them.
Well, as you mentioned, it's part of the Dodd-Frank Act, which was all about preventing another 2008 financial meltdown. How does 1033 help prevent that?
I think the biggest thing is the overall goal that, and if you read the 500-something page document,
I didn't. I was going to, and then the cat got out.
Yeah, I don't blame you. It was a fun read, definitely a long one, but a fun read. But in those 500-something pages, a key message that really comes across from the CFPB is their desire to put consumers back in control. They really want that a consumer can sit there and kind of in a real-time fashion understand how are they sitting in how's their financial position. But I think the other key message that comes across is they want more transparency. And by putting consumers back in control, there is that focus of transparency. So things like any fees associated with your bank account, any of that kind of information is now going to have to be brought to light. It's going to have to be shared. It has to be in an easily readable format. It is really focused on kind of highlighting transparency and ensuring that the data that these banks have on consumers is easy to share, it's easy to access, and then it could be shared with a platform that can turn it into a more user-friendly, interactive approach to finances. So there's definitely, obviously, the 2008 financial crisis is obviously in the back of everyone's mind, but the whole purpose of 1033, as well as other financial regulation that's been occurring in the U.S., is really just kind of highlighting that transparency and doing transparency by putting consumers in control.
I'm always thinking about innovation and new products and new functionalities, things that haven't been possible before, but they are now. To what extent does having these guidelines in place, these new rules for the road, serve to kind of speed up innovation and maybe create a sea change in how financial transactions are done?
So it comes down to how consumers are going to use the data. And it really spurs, exactly as you were saying, that type of innovation, that if consumers want to better understand how they are standing in a financial situation, budgeting apps will take off. And that's what we actually saw or that's what Yodlee software in the UK, is that when open banking was first implemented, majority of consumers were looking and trying to connect with PFM tools, because that was kind of the immediate tangible reaction that a consumer could see by sharing their data was, oh, I now understand how much money I'm spending on different things. I think the other thing that really drives innovation, and you start thinking about other use cases, and the CFPB even mentioned it in 1033, is that this could also dramatically change the way that consumers interact with credit and the way that small businesses access credit. Because if you can take this information and use it as alternative data for a credit report, you can get a much richer view of a consumer's credit worthiness or a small business's credit worthiness, and that can dramatically change the way that a consumer can access credit and then even actually use credit. So there's a huge number of innovative solutions that can definitely come out of these, and I think that's really the exciting part of getting an open banking regulation. Is we've started to see these. The US has done a great job of pushing forward without any regulation to kind of try and get all of these innovative use cases. But it's now that's going to be kind of mandated, and it's going to be a requirement to share the data, is where we'll really start to see the innovation be spurred and start to develop in new and unique ways to serve U.S. consumers.
What's been the general response to all this? I mean, is it being embraced and cooperated with wholeheartedly, or are institutions griping about not having enough time to implement it? I mean, is this being welcomed with open arms or some trepidation?
I think a mix. I think it's been in the tea leaves for a while now. Everyone knew that this was happening. What we did see between the kind of notice of proposed rulemaking, which is essentially the draft rules that the CFPB put out in 2003, compared to the final rules that we got a couple weeks ago, timelines was definitely a big concern for a lot of the big banks. And we did see the CFPB respond to that by extending the timelines and giving them more time. But I think in general, what we're really seeing, and again, kind of sitting around at the FDX table, is general excitement that this is happening, this is coming, and also then still some concerns and some worries about there's certain parts of the rule that don't 100% make sense. You can interpret it in 10 different ways. So it's really going to be kind of the next, as the way I see it, the next phase for banks and fintechs is to just work together and understand, okay, how are you understanding this part of the rule, or how do you think it's best that we work forward and we partner together? And again, those are the discussions that we're having at FDX is, okay, one of the requirements or one of the data pieces that is going to be available is terms and conditions. Well, how exactly is the best way for a bank to share the terms and conditions of this checking account with a third party? Do they want the 60-page T's and C's, or do they want just a PDF form and a link to just the PDF form? Like, figuring out exactly how those types of interactions, I think, is the key concern, and the key, at least for me, the key thing that's taking up time right now is just figuring out some of the parts of the rule that aren't 100% clear, but doing that in collaboration with the banks.
We've been talking about FDX and its role in, building a standardized API system. How hard is standardization going to be? Because in my mind, I'm thinking there's going to be multiple solutions aiming for standardization that will ironically end up doing things differently.
100%. So I think standardization is always, there's a lot of cooks in the kitchen, and that is always a challenge. And it's always a challenge when you get a bunch of people trying to get together and collaborate on one thing. But I think that is also the really unique element of FTX and why it's been so successful to date, is that it's really focused on getting everyone around the table, giving everyone a voice, no matter if you're a big bank or you're a small bank or you're a community bank, giving you a chance to participate in building something that empowers end users to better understand and leverage their data so they can do it in a secure and reliable manner. So FDX is there to build the standard. FDX is there to help support that sharing of the data, and they build the standard with the right people around the table, with the experts, with those firms that have been doing it for 25 years, those firms that have been doing it for hundreds of years. They get them all around to talk about those points and understand, okay, we want the authorization to look like this. Okay, well, we want the authorization to look like this. Well, what's the best practice? What can we leverage from other countries that have implemented open banking, other countries that have standards? Like, where can we take lessons learned to make sure that whatever we're building is truly best fit for the U.S. market, U.S. consumers, as well as U.S. banks and U.S. fintechs? Because ultimately, that's what we want to achieve. So over the next couple of months, FDX is looking to become a recognized standard-setting organization under 1033 by the CFPB, something that Yodlee has been spending a lot of time on. We sit on the board. We have been working very diligently to help support the drafting of the application that was submitted and ensure that FDX is ready for that next stage and ready for the responsibility of being a recognized standard-setting organization. So we're hoping to hear back on that update soon. But I think it is definitely the right path forward that as we want Section 1033 to be implemented, we want the banks to meet these compliance deadlines. It is the best move to actually have a standardized API and to have it be fully recognized by the regulator.
I don't want this to get political, but what are the things that could end up impeding or reversing this kind of regulation? Because I picture somebody at some financial institution somewhere thinking, I can drag my feet on this because it's not going to stick, or it's not going to be seriously enforced, or things are always changing.
So I think we're in a very unique time right now. Obviously, we had the election in November, and there's going to be a new administration coming in to the office come January. So what we are probably going to see is there's going to be some changes, but not having my crystal ball right next to me, we don't know exactly what the changes are going to be. What we can say is there's bipartisan support for 1033, for the concept of putting consumers back in control of their data, of making sure that they are kind of interacting and engaging in financial services more than they have been over the last couple of years. There's obvious bipartisan support for that concept. So we feel very certain that there will definitely be a 1033 rule, a requirement for banks to unlock this data. Exactly what elements change, we could see potentially an extension of the timelines if that's what the banks need. We could see some other elements of the rule changing. But I think the one thing I would say to anyone listening is don't think it's the be all end all. We're definitely still going to see something come January, and it's going to be very positive. It's going to move in the direction of having open banking in the U.S.
So what have I left out? What do you think is really important for financial institutions and those third-party providers to take away from this talk?
Even if you don't think you're included in 1033, you probably are in some way. So I'd say as you kind of think about discussing planning for 2025, make sure to include time to talk to fintech. So come talk to Yodlee, reach out to us. We'd be more than happy to talk to you about 1033 and just explain exactly what it could mean for your business. Even if you don't see open banking or data sharing as a key element of your business, it's probably an ancillary one. It's better to be informed and better to be aware of anything that might potentially impact your business sooner rather than later. So definitely keep it on your agenda, keep looking at it, keep understanding, and reach out to Yodlee. We'll be more than happy to help.
Well, Kat, it's been great having you on. We appreciate you being our guest. If listeners do want to find out more about 1033 compliance, what are some good resources that you could kind of point them to?
I would definitely say check out Yodlee's website. We've actually just redone our open banking page. So if you want to hear more from me, then you can definitely, I believe there's a few videos on kind of high-level summaries of 1033. But check out the Yodlee webpage. Check out definitely the CFPB website. I know it's a 500-page document, but it is worth the read. If you don't want to read it, definitely then reach out to Yodlee. Also, I think a good area to look at is FDX as well. We've been doing a lot of work to encourage and start drafting white papers and more blog posts to kind of break down the legal jargon and the regulatory jargon that's included in 1033.
Great. We appreciate it. And for you listening, we'd love for you to subscribe to the show. Do that soon so you don't forget. As you've heard, our guests are talking about things you need to know if you want to stay ahead in financial services and fintech. And if you want to see how aggregated financial data might be of great use in your business, just visit resources.yodlee.com/podcasts. And we'll see you next time on Data Driven Finance.